We're looking at a market that is at the highs of the afternoon. No doubt those Fed minutes basically talking about weakness in the economy is triggering more speculation about interest rates coming down at some point. Money moving into financials. Back in a moment. Welcome back. Look at that market, up 106 points on the Dow Jones Industrial Average right now with 7 minutes before the close of trading, 13,627. The action really started cooking about an hour and a half ago when we got the Federal Reserve's minutes on the last meeting on interest rates. Basically, the Fed came out with the minutes of that interest rate meeting, and it was pretty unanimous that the housing slump is going to last longer and be more severe than people expected. They saw a weak housing market impacting growth longer than expected. They saw the GDP below trend expansion for the rest of '07. And as a result of those comments, the market started rallying, no doubt, on an expectation that interest rates will have to come down. Take a look at the most interest rate sensitive group, and that is the financials. That's really where the gains are today. The major banks are up across the board. The brokerage is doing well as once again we're seeing deal flow. And we are looking at a record setter in terms of deals in 2007. The fees are enormous. Goldman Sachs, Morgan Stanley up big. The rest of the banks higher as well. Dylan, what are you seeing down there?
Yeah, again, the crowd's actually developing in a couple of places. Some of the transport's being traded actively. Inquiries on Hewlett-Packard behind me here. So even the technology names, the chip names were the weakest going into this morning coming out of the China sell-off. They've peeled off of their lows. And then the tech names that are the strongest are the Gen Y names, most notably Apple. But Google continues to perform very well. So there's strength in technology to complement the strength that you just described in financials, Maria. And then the icing on the cake here, strength in the REITs. That is purely M&A driven at this point, or at least largely M&A driven in the short term. After yesterday's deal, the upgrade at Deutsche Bank to this morning sends all of them. Take a look at something like Simon Properties, but I can go down a whole list for you there, and you will see an acceleration of momentum. All of that queued up into the middle of the day when the Fed minutes came out. Again, the headlines sound ostensibly negative, or certainly cautious about the economy, but investors interpreting them as, for the day anyway, as an indication that the Fed certainly is not going to raise rates anytime soon, and the bond market interpreting it as creating the possibility for a Fed rate cut once again before potentially the end of the year. The stock market, when it's all said and done, lights up to the tune of a new S&P 500 record, not just a new Dow record. So again, never before has the S&P been as high as it is right now. Maria.
We got the record books cooking today. Meanwhile, even though we had a 6.5% sell-off in China, the best performing IPO in the United States in 2007, a Chinese company. That's Acorn International, went public at 15.5. It's up 93.5%. Pretty sweet return. We'll be back with the closing countdown next. Stay with us. After the bell, stay with us. We've got the CDC warning a man with a rare form of drug-resistant tuberculosis, may have spread the disease during 2 transatlantic flights. We have the chief medical and technology officer of the company working on a test for the dangerous disease. 4 o'clock Eastern on that.
TD Ameritrade.
Back on the floor of the exchange with Scott Wapner. Record territory, not only for the Dow, but also the S&P 500. What got us here?
You know, funny thing is, if I'd have told you at the beginning of the day, given what happened in China, that we'd be at a new record on the S&P or the Dow, you'd have said you're crazy.
We laughed you out of the building.
Absolutely. REITs very strong today. Energy strong today. Financials strong on the heels of all the deals that we've been seeing. That's what's gotten us to this record. Also with now is a rate cut back on the table.
Yeah, I mean, well, listen, if you talk to some of the bond traders, they'll tell you that they interpreted those Fed minutes as opening a crack in the window,
a crack
in the fourth quarter.
Market yet to kind of catch up to what the bond market is thinking on that.
Interesting stuff. The bell rings. Record territory abounds again on Wall Street. S&P 500 goes out at 1529. S&P 13.6. Dow 16,634. 13,634. Closing bell continues right now with Maria Bartiromo.
Well, the record books cracked again on Wall Street today. Stocks surging in the final hour of trading to uncharted territory. The Dow Industrial's up triple digits to another all-time high, 25 record highs in 2007 for the Dow Jones Industrial Average. Check out the bigger story here, though. The S&P 500 finally crossing above its all-time high of 1527. The first time ever we are looking at a new all-time high of 1530 on the Standard & Poor's 500 index. And as you can see, it has been quite a 5 years. Good afternoon, everybody. The story of the day on Wall Street today, the amazing resiliency of the U.S. stock market. Record shattering once again today on Wall Street, investors shrugging off the Federal Reserve's growing concern about housing and a sell-off in Chinese markets overnight. Instead, investors are expecting that the negative housing impact will mean that the Fed will have to lower interest rates at some point. That gave a lot of fuel to financials. That was the leadership group today. Take a look at where we're ending today's session at 4 o'clock on Wall Street, with the Dow Jones Industrial Average holding on to a gain of 111 points, accelerating that move in the final hour, up 1% at an all-time high of 13,632. The financials leading the momentum for sure on that expectations of rates coming down. Take a look at some of the major banks and brokers. No doubt the major investment banks also getting some great fuel on further deal flow, and we will have those deals for you coming up on the program. Standard & Poor's 500 index at an all-time high tonight, a new closing high of 1530.10. That's up 0.75% on the session. It is up 12 points. And the NASDAQ also participating, technology, another group that did well today, sending the NASDAQ up 20 points. That's also 1%. And as you see, it was a day where things accelerated late in the session. We've got all the market action covered for you and how you can ride out this rally. Cnbc Scott Wapner, Dylan Radigan, and Ron Insana, along with market strategist Dan Genter with me. We begin with you, Scott.
Yeah, I mean, Dylan, it was really interesting. The market really shrugged off the news from China. It took a little while for the market to digest, figure out exactly what the Fed minutes meant. Remember, when the Fed minutes came out, the market slid a little bit, gained that back after a short period of time, and now we're here at, up.
Two things, and you hit it on the head going into when the bell rang. And Maria, it shows how adaptable the stock market is, period. This exact same thing happens in China, or the equivalent of it, 2-3 months ago, and we have a global wipeout. Then the U.S. stock market goes down 400 or 500 points, and I don't want to say wipeout, but you had that big swoon. An equivalent event, large drop due to basically a financial adjustment of the Chinese stock market. Today, they get a nice swoon, 6.5%. It's a real number. Takes them a couple of hours. They say, okay, we've adapted. China's going to be volatile. And then the focus goes to that Fed. And it also goes to show how, again, the market is still inclined to look at the world half full. You could have looked at those Fed minutes in any way you chose to. Right. Investors today chose to look at them ultimately as a positive event.
At least for today. For today. Because as we've seen in the past, certainly things can change over the course of time. Dylan, thanks a lot.
Absolutely.
Let's talk about some news that was just breaking, by the way, before I came down here on Dow Jones and News Corp. The largest outside shareholder of Dow Jones, that's T. Rowe Price, urging the Bancroft family to sell to Rupert Murdoch. That is according to the Financial Times. That is what the largest shareholder, T. Rowe Price, was telling the Financial Times. That sent shares of Dow Jones higher by about 2.25% just before the close. News Corp was moving higher as well. Just wanted to get that out of the way because it was breaking news just before the end of the day today. As we've talked, new record on the Dow, new record on the S&P 500. Who'd have thought after the way the day started today? We hit a lot of new highs today on the Dow that I'd like to run through. Alcoa was up 1.5%. American Express 0.33% to the upside. Boeing higher by 2%. Caterpillar, a very strong day, up 3.5%. Verizon strong as well. We talked about energy being one of the leadership groups today, along with the REITs, financials as well. Talk about some new highs from the energy stocks today. ExxonMobil, the shareholders meeting going on. ExxonMobil up 1.5%. Marathon up 2.5%. Transocean, RIG is the ticker symbol there, up 2%. Apache and Consol Energy, a new all-time high for that stock. Take a look at the REITs. Mentioned how strong the REITs were today. Let's do a quick run here because Deutsche Bank upgraded 8 of the REITs this morning. That sent all of them higher throughout the day. Avalon Bay, Boston Property, Simon Property Group, among them, all trading, Maria, to the upside today. 111-point gain on the Dow. Who'd have thought?
All right, Scott, thanks very much. And as we've been telling you, the market was definitely solid today. The Dow and the S&P 500 pushing further into record territory. At these levels, some are wondering whether the bulls still have a lot more room to run and whether the buying opportunities remain slim, or will this continue? The momentum sure is strong. Joining me now to talk about it is Dan Genter. He's President, CEO, and Chief Investment Officer at RNC Genter Capital Management. Ron Insana also with me, CNBC Senior Analyst. Nice to have you with us, gentlemen. Welcome to the program.
Thanks, Graham.
Let's talk about...
Absolutely.
Good to have you. Let's talk a little about what you've been doing, Dan, in terms of changing your portfolio in the face of all of these records. Have you moved money around in the last couple of months?
Well, I think what we're really looking at is not so much major sector changes, Maria, because most of the sectors have been doing fairly well, but individual stocks. I mean, the great thing about this type of market is it's been very, very rational. You have a lot of individual investors that are, went into hibernation after February. They're sticking their head out of the cave and starting to stick some toes in the water, and it's made for very rational moves, very rational rewards and penalties. And so as you have stocks that basically are producing, we're certainly taking some money off the table and rotating into some areas that really we haven't seen any production yet, but we think we'll see it as we go to the latter part of the year.
So what changes have you made, Dan?
Well, I think some of the areas that you want to look to now is that we took some profits out of the energy area, but I think especially in the oil service area, and in particular the deep water drillers, it's a time to really look at that area. Oil year over year is down about 10%. They're going to have some tough comps. Basically, any pullback in that area, I think when you go into those types of companies like Diamond Offshore and Weatherford, I mean, you have a real opportunity because they're going to continue to drill as long as oil is north of $50 a barrel. And the rig rates are up about 300% over the last 2 years. You can't even get a rig until 2009. So that's one opportunity. And I think also in the healthcare, in particular in the biotech, and in the medical devices, they're going to have a great year being buoyed by a lot of M&A activity.
Ron, it's interesting to note that we began the day talking about the sell-off in Shanghai, 6.5% lower on the Shanghai stock market, and all these worries recently about China really dictating markets around the world just didn't materialize today.
No, and we've only had one example, really, Maria, this year, or in the last several years, in which China by itself was able to influence global trading. Last night, as you said, was shrugged off relatively easily. Very likely that China's government will continue to make attempts to cool that market down, having been up as much as 63% year to date. But here at home, the fundamentals were positive, and the Fed minutes that came out this afternoon, left the Fed pretty much where they were. They're talking about housing weighing on the economy. They're talking about inflation risks too high. They kind of cancel each other out. It means the Fed's on hold, and it looked like the market, whether it wanted a rate cut or not, at least gets a neutral Fed, which seemed to be helpful late in the day.
So where do you want to be looking in terms of growth around the world then, Ron? I mean, you're seeing so much money move into global markets because of this perfect liquidity story. Anything look to you, or are you hearing from large fund managers at this point that they're seeing a crack in that liquidity story in any way?
Well, no crack in the liquidity story whatsoever. I mean, the crack in liquidity will come after a crack in a major market. And, emerging markets are doing very, very well, whether it's China, whether it's India, Brazil, Mexico, Russia. What worries me the most is the speed at which emerging markets are ascending, and they are, in fact, probably due for a correction based on valuations. The Shanghai Composite selling at about 45 times earnings. Again, even though 100 million people are invested there, that is, 1/12 of their population. So it's not the type of bubble that we may have experienced, back in the late 1990s, when as much as 60% of households in the United States had exposure to stocks. But still, you have to watch the rest of the world with a little bit of caution here, given how far we've come and how quickly it's all happened.
Dan, let's talk about these FOMC minutes. We've got the commentary here from the FOMC talking about the last meeting on interest rates. The officials at the Fed basically are worried about inflation risks, and they're still worried about a slowdown in housing impacting the rest of the economy. What was your take on the FOMC minutes today?
Well, we think the comments were relatively neutral. I mean, the Fed is in a position to where they're talking very hawkish and they're walking very dovish. Because the fact of the matter is, if they wanted to be more hawkish, they would raise rates. And we've been on hold for quite some time. There really doesn't seem to be any indication of them raising rates in the near term. And they're probably going to stay on hold. I mean, there's nothing real magical about this. Historically, they try to keep Fed funds at about 225, 250 basis points over the trailing year-over-year run rate in inflation. And that's very, very close to where we are. So they're probably not a big factor, but the perception is going to be a factor as we go forward. And if rates start to inch up from here, it's certainly going to curtail our ability to have further multiple expansion this year, because we're already had multiple expansion of 1 point this year. And that's probably going to start to get a little bit of a ceiling on that.
So, Dan, the financials really took off today after the FOMC minutes came out. You're looking at a lot of the companies that are very closely tied to the idea that when rates go down, their fortunes will improve. Do you want to be betting on what happened today? Do you want to be in financials at this moment?
Well, Maria, I think there's a very clear Mason-Dixon line in the financials, is that clearly this is going to advantage, and there's a lot of other advantages to the large cap. The large cap multinational financials are going to benefit from international exposure. The weak dollar actually helps them. The flat yield curve doesn't help them very much because they're much more reliant on fee revenue. On the other hand, you have the smaller banks that even though subprime hasn't hurt them too bad, there might be another bullet that's going to be fired there. Net interest margins are still being squeezed, lower loan originations. So I think the large cap will do very well, but you probably want to tread very, very cautiously with the smaller financials.
All right, we'll leave it there. Gentlemen, nice to have you on the program as always. Thank you.
Thanks, Brent.
We'll see you soon.
Thank you.
From executive pay to environmental responsibility, ExxonMobil tackling a host of issues at the annual meeting today in Dallas. CNBC's Mary Thompson is there. Mary?
That's right, Maria. Executive pay and environmental issues a focus at today's meeting. I'll have that story coming up.
All right, and also coming up, forget coffee table books. A coffee table computer may well be the ultimate conversation piece. Is the touchscreen tabletop the next big thing from Microsoft and shareholders? A live show and tell coming your way. Then powering your portfolio with utilities. Five-star fund manager Edward Perks, my guest of the Franklin Income Fund. He manages roughly $59 billion. Hear why he's invested a lot of that money in utilities. Back in a moment.